as traders, it's very, very important that we're locking in profits. But how do we do that? Well, the way I lock in profits is simply by looking at past chart history, whether that's on the daily, whether that's intraday, right? So locking in profits to the long side, obviously overhead resistance, previous highs, and then locking in profits to the downside would be the retests of previous lows. Now, you guys know me that I'll take one full-size position at an area that I like, right? Let's say I'm going long. Let's find an example real quick to make this easy. Let's go to ACB. All right. And let's look at a hypothetical trade. There's nothing wrong with a hypothetical trade. All right. So let's go ahead and remove some of this out. All right. So at this point in time, let's act as if I never sold this trade right early. So when we were looking at it right off VWAP, I liked it. I was going to put my stops down here at 553. And as I'm thinking of this trade, I'm like, okay, I know where my stop's at. I know my stop's got to be under that low, right? Give it about a cent. So I'm going to put my stop at 552. And let's say my entry is right here. Let's go ahead and put another line up. Might as well. Let's say my entry is right there. We're going to color that green. That's fine. We'll color it green because that signals entry. So green's entry, red stop. That's what I know. That's the first part is, okay, if I make an entry, it's going to be right here at 571. My stop's going to be 552. That's 20 cents, right? So I know my stop. 20-cent stop. How much am I willing to lose on this trade? How good is this setup? How much do I like this setup? It's, 70, 30, 80, 20. It's not a bad setup. So you know what? I'll risk 200 bucks on those 20 cents a share. I can buy 1,000 shares, right? So now it's, where's my profit targets? That's very, very important, right? Where am I going to look to take profit? Well, I'm looking left. I'm just looking left. All right, well, I do know we had some resistance right there at 595. So that's what I'm going to classify as my first target, right into those highs, right? That's going to be my first target right there. And then I'm going to say, what if it breaks over my first target? I'm going to have a second target, right? So let's say my second target, looking left, are these highs. Well, that's a pretty good area because we had a spiking high there, spiking high there, spiking high, spiking high. 4 different times, 613 was respected. So let's go ahead and say that's going to be our second target. All right. Third target, retest of daily highs, 636. So just like that, I was able to say, okay, I like the entry here off that green line, 571. My stop is going to be 552. Why? Because that would be a lower low. It's underneath the previous low. And if the stock's going to be strong and hold a higher low, we don't want to see it put in a lower low. Pretty logical stuff. Common sense, right? We all know that. So again, entries are at 571. Stops are at 552. My first target is going to be 595 because it's going to be a retest of those previous highs. So what am I going to do when the stock gets to my first target? I'm going to lock in some profit. So let's say I have 1,000 shares, right? I have 1,000 shares right here, 1,000, right? And my risk is 0.20. So, and I'm making my entries at 571. So the stock pushes up to 595. I'm going to take half, which is what? 500 shares. I'm going to take 500 shares here. Now, what if I take half at 595 and the stock comes back down to my entry? What happens? I'm break even. But what happens if you actually hold that other 500 shares down to your stop? You're probably going to break even on the trade. So when I'm taking half at my first target, I'm immediately bringing my stops from here up to break even. So I'm locking in those 500 shares at that profit no matter what. So in this case, it was about 25 cents. So I would have, 1,000 shares, taken 500 shares at 25 cents a profit. I would have locked in $125, right? I would have locked in 125. My stops would have went to break even. So if the stock comes back down and stops me out, I'm still locking in 125. If I sell 100% right there, I'm locking in $250. So it's really personal preference. Do you want to lock in all of your money, take your $250 and run? Or do you want to take half, lock in 125 and give the other half a little bit more potential, a little bit more room, right? To see if it's going to break up over that high and maybe get up to the second target, maybe get up to the third target. Let's say that, let's go ahead and clear some of this out. So let's say that you like to scale like me, right? So you're taking half, you're bringing stops to break even, you're officially in a risk-free trade. No matter what, you're going to make that 125 bucks, even if it comes down and stops you out on the other 500. But let's say that you get to your second target of 613. Well, now you're taking 500 shares from your entry and you're getting 613 out of it. So what is that? That's 30, 40. Let's just call it 45 cents for round numbers. So now you have those 500 shares times 0.45. If you were to sell it, you get another 225 bucks. So now your 225 plus your 125, you will now have made $350 versus the initial 250 by selling 100% here. Again, remember, if you would have sold 100% here, you would have made 250 bucks. By selling half, bringing your stop to break even, and then selling at your second target, you would have made $350. So an extra 100 bucks. Now let's say that it comes up to your second target and you're still thinking it's strong and you want to continue the scale. So what would you do here? You would take another half, right? What's half of 500? That's 250. So you can take another 250 shares right there. When it gets to your third and final target, you would close it completely, your other 250 shares, right? So looking at the big picture, you locked in here, right there initially. It was what was it? 25 cents on 500 shares. Locked in 125. You had another 250 shares at 45 cents. That's 112. So you have 112 plus 125. And then you take another 250 shares at that top target. So you just made 62 cents. So 0.62 times 250 shares, 155. So 155 plus 112 plus 125, you would have made about 400 bucks on that trade by doing it this way. Again, taking half, bringing stops to break even, scaling. That's what I like to do, right? 400 bucks. Or you could go ahead and take your full 1,000 shares at that target and you can lock in 250 bucks and you're out. But you may miss out on that extra $150. Now, it may not seem like a lot, but depending on how much size you have and how you scale, really makes a big difference. Let's say you took 5,000 shares and you scaled 1,000. Those 1,000 shares at that extra 15 cents, that really adds up. You're talking maybe another 100 bucks to another 200 bucks, right? So it really just depends on how you like to trade. Do you want to take all of your profit all at once, lock it in, walk away? Or do you want to give the stock a chance to continue moving up? So let's see how this trade would have worked out. You're long, never stopped out. First target hit, taken half. Second target hit, taken half. Third target hit, you're out. I mean, you could have easily made 400 bucks on that trade by simply taking half, putting your stop at break even, and letting the rest do some work for you. So, Nico, hopefully that answered your question as far as how to take profit. That's how I take profit. Again, just looking left, looking at previous highs, previous past chart history to really determine where the stock could go before sellers come in and start taking profits. And again, you think of 100 traders in the market. 90 of them are looking left. 90 of them are selling at these retests. Selling some at the retest, selling some at the retest, selling some at the retest. And that's why you could see that when we came up to some of these targets, there was some selling pressure, right? There's some selling pressure here. Boom, third target. There was some selling pressure there because traders, professional traders that know how to take profit, that's how they're taking profit, right? So that's why these stocks will come up to these levels, have issues, and come back down. So that's how I take profit. Yeah, you can do a trailing stop on the rest. So let's say you make your entry, you take half, and you put a stop at break even. You can make that a break even trailing stop, absolutely. So when you have 500 shares left and you go in and you put your stop at 571, you can do like a 25-cent trail to where this move here would have brought your stop up a little bit. This move here would have brought the stop up a little bit. You would have gotten stopped out somewhere around that $6 area. Again, if you would have put a trailing stop in when you took first target profit, you would have been stopped out somewhere around $6 versus being able to manually click that sell button and take it for another potentially 40 cents into your third and final target. So that's why I don't use trailing stops in a 50-50 market. Now, if it's supernova season and stocks are literally just doing this, higher lows, higher highs, all freaking day, running 1,000%, oh, absolutely, I'll put a trailing stop in. But that trailing stop is going to be determined by how big the swings in price are, right? So we can see here that your typical swing in price on this stock, from the highs to the pullbacks, are about 40 cents. 560 all the way to 620. Where did we pull back to? $6, about 20 cents. So you look at the average, it's on average having price swings of around 20 to 30 cents. So if you're going to do a trailing stop and you don't want to be prematurely stopped out of your trail, you have to get an idea of what the average swing of the stock is based on the price, and then that's how you're going to determine your trailing stop. If you had a 5-cent trailing stop, one little tick is going to stop you out. So, yep, you can definitely use trailing stops. I personally don't, because I like to manage my trade and take profit when I want to take profit. And in this situation on AQB, all 3 targets would have been hit. I would have traded it just like that. Would have locked in probably $400. But again, you saw me sell my position early out of analysis paralysis, I would say. I wouldn't say fear of losing, because I'm fine with taking a loss. I would say that it was more analysis paralysis, getting so fixated on the fact that I wanted to see it hold VWAP and that I thought it should push there, when in reality, it still had room down into the 550s, and it was still a healthy, good-looking trade. So I would say it was just a little bit of veering away from my plan and over-justifying the trade, and being stuck in a little bit of that analysis paralysis on why I stopped out early.